Hi everyone, today we'll be going over accounts, May-June 2021, paper 2-3, question number 2. This is structured paper 2, which has total marks of 90 and also has a time limit of 90 minutes. And since question number 2 is of 15 marks, we will be attempting to solve this question under 15 minutes. So without any delay, let's get started. Hamid prepares control accounts to check the accuracy of his business's purchases and sales ledgers. Hamid prepares control accounts to check the accuracy of his business's purchases and sales ledgers. So firstly, we need to explain two benefits to a business of using control accounts other than checking the arithmetical accuracy of ledger accounts. So the first benefit would be to check for fraud, as the work of the ledger clerk is checked by another member of staff. Let's write that down. Check for fraud, as the work of the ledger clerk is checked by another member of staff. Secondly, control accounts provides quick access to totals for trade receivables, which will facilitate in the preparation of financial statements. So let's write that down as well. Provides quick access to totals for trade receivables to facilitate preparation of financial statements. Alright, this concludes the first part. Let's move on to the second one. We're given additional information. On 31st January 2021, we have the balance of the sales ledger control account, and we're given the total for January 2021 relating to cash journal, general journal, sales journal, and then sales returns journal. And on 31st January 2021, we have a credit customer who had overpaid his account by 170. Now let's have a look at this question. We need to prepare the sales ledger control account for January 2021. So for the first information, we're already given the balance of the sales ledger control account on 1st January 2021, which was 17,820. And whenever we're talking about sales ledger control account, the balance will always be recorded at the debit side if we're talking about the opening balance. So let's do that first. So opening balance, we can write it down as balance BD. And we're already given the amount of 17,820 in the first information. So let's look for another information now. In the cash book, we're given the discount allowed of 430. So whenever we're allowing a discount, it always reduces the balance on our trade receivables. So if our balance on trade receivables is recorded at the debit side and this discount allowed will reduce that balance, then that means that the discount allowed should be recorded on the credit side. So let's do that. It had the balance of 430. Let's move to another information now. We have receipts from trade receivables. So these are the amount that we received in return for the trade receivables amount. So if we receive a certain amount, then it obviously reduces the balance of the total trade receivables, which means that this amount of 16,230 will also be recorded on the credit side. Let's do that. We can write the receipts as bank because we will introduce those cash into the bank account. So this will have an amount of 16,230. Now another information is the contra entries with the purchase ledger of 890. So contra is a thing which is like a cutoff between sales and purchase. So if I am A and there's a second party called B, and if I purchase goods worth 200 from B, and if B purchases goods worth 100 from me, then out of the 200, 100 we can just cut off from both of these amounts, right? So out of this 200, if we divide it into 100 and 100, then I also owe B an amount of 100 and B also owes A the amount of 100. So we can just cut these things off. So this cutoff is what is known as the contra entries. So obviously it again reduces the balance for the trade receivables, which means that the contra will be recorded on the credit side. Let's do that. So we have the balance for the contra as 890. Let's have a look at another information. We have an amount 18,440 on the sales journal. So these are the amounts that we made sales of, meaning that this will increase the balance of the trade receivable. So this amount must be recorded on the debit section. Let's do that. So that's going to be sales, and it will have a balance of 18,440. Nextly, we have sales return journals, which has the value of 310. So sales returns, if sales increases the value on the trade receivables, then sales returns obviously decreases the value on the trade receivables, which means that this amount of 310 must be recorded on the credit side. Let's do that. So we have sales returns with the value 310. Alright, so we've done the work for information 1 and information 2. Now information 3 states that on 31st January 2021, a credit customer had overpaid his account by 170. So if he overpaid, then obviously it has increased the receivables amount, right? So this must be recorded on the debit side. Let's do that. Since this was on the last date for the month, 31st January 2021, this will be recorded under the heading of balance CD because this will be the closing balance. Let's write it down. This has the balance 170. So now we need to figure out the total for both sides and then figure out the closing balance on the credit side. So in order to do that, let's first figure out the total for the debit side. In order to do so, we just add these three amounts. That will be 17,820 plus 18,440 plus 170, which gives the total balance to be 36,430. And this must also be the total for the credit side as well. Now we need to figure out the balance CD, or the closing balance. Now since this is a closing balance, in order to figure this amount, we just need to subtract all of these four amounts from the total. So that's going to be 36,430 minus 430 minus 16,230 minus 890 minus 310, which gives the closing balance to have the amount of 18,570. Now what most people forget to do is we need to introduce the closing balance as the opening balance for next accounting period. So if the closing balance is on the credit side, then the opening balance will go towards the debit side. Let's do that. So this will have the amount 18,570. But we remember that there is another closing balance on the debit side as well. So this will act as the opening balance on the credit side. So that's going to be balance BD with the amount 170. Alright, this concludes the second part. Let's move on to the third one. We are given additional information relating to the balances in the purchase ledger and purchase ledger control account. Firstly, let's have a look at this question. We need to prepare statements to show corrected totals for the purchases ledger balance. Let's first do this. Now we are given three errors. The first one is that the total of the discounts received column of 110 had not been posted from the cash book. So this is an error relating to the cash book. The thing to remember is that any error relating to cash book will directly affect the balance on the purchase ledger control account, but not the purchase ledger account. And since we're figuring out the correct balance for the purchase ledger first, we can completely ignore this error number 1. Secondly, we're given that the total of the purchases returns journal had been overstated by 250. Again, this is an information relating to purchases returns journal, but not the purchases journal. And since we're talking about purchases ledger, the amount on it will only be affected by any errors relating to purchases journal, but not purchases returns journal. So we can completely ignore the second error as well. Now, thirdly, we're given that the interest of 130 charged by a supplier because of an overdue. So since this interest is charged by a supplier, we need to pay this interest, right? But balance had been debited to the supplier's account. So whenever we debit to a personal account, it means that they are the ones paying it. And this is an error because we are the party that needs to pay the interest of 130. Instead of stating that we paid an amount of 130, this just states that we received an amount of 130. Now, in order to show that we paid 130, if we are to include paid 130 just once, then this will just cancel each other out because received 130 and paid 130, this will just cancel out and there will be no amount indicating that the interest of 130 had been paid. So in order to show that amount, we need to include paid amount of 130 twice, which gives the total amount to be included to be 260. So this is the error that we need to rectify in order to figure out the correct balance on the purchases ledger. Let's do that. So we are already given the incorrect total amounting to 12,860. And we're talking about purchases ledger balances. So this shows the purchased amount, which means that whenever we're talking about the purchase, the company has a cash out or they need to pay the amount, right? And we have to include the amount paid towards the interest as well, which means that we just need to add the amount. We need to add the interest paid. Now, in order to rectify, we had to include the interest paid amount twice. So that's just 130 times 2, which shows the total amount to be 260. Now, this is the only error that we need to rectify in order to figure out the correct balance for purchase ledger. So let's just do that. So now we can figure out the correct balance. That is just going to be 12,860 plus 260, which gives the balance to be 13,120. Now, for the second part, we need to show the correct total for the purchases ledger control account. We already rectified the third error, but these remaining 2 errors relate to the purchase ledger account because whenever we're talking about purchase ledger control account, we include the amounts directly from the cash book and the journals. Okay, the first error is that the discount received column of 110 had not been posted. So discount received is something that will always reduce the amount to be paid, right? So we just need to subtract this amount of 110 in order to figure out the correct total. Let's do that first. So we can just indicate less and then discount received. This had the amount of 110. Let's look at the second error. The total of the purchases returns journal had been overstated by 210. So purchases returns is something that will reduce the amount to be paid, right? But it had been overstated, which means that we again have to reduce this amount of 250. And 2 minuses result in a positive, which means that we need to add this amount of 250 back in order to figure out the total for our purchases ledger control account. Let's do that. So we can just write down add purchase return overstated. So purchase return had been overstated by 250. Now these are the only errors that need to be rectified in order to figure out the correct total for the purchase ledger control account. Let's figure that out now. So correct total is just going to be 12,980 minus 110 plus 250, which gives the total to be 13,120. And remember that this is the same balance we figured out for the purchases ledger, which means that both of these solutions is correct. So this brings us to the end of third part as well as the question. If you found this video useful, make sure you leave a like and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any more of these videos in the future. Thank you.